Now hand the conference over to Mr. Ankit Patel, Executive Director at Bodal Chemicals Limited. Thank you, and over to you, sir.
Thank you very much. Good evening, everyone. Thank you for joining Q4FY20 conference call of Bodal Chemicals Limited. On today's call, I have our CFO, Mr. Mayur, with me as well. I hope all of you have got an opportunity to see our financial results and presentation filed with the stock exchanges and are also uploaded on our website. First, I will highlight current industry scenario and our business strategy, and detailed financial performance will be taken up by Mr. Mayur later on. The lockdown in the country for around 40 days from March ending due to COVID-19 led to significant disruption in our business in Q1 FY21. We started our partial operations from May beginning, but there were issues with respect to labor, transportation and lower demand across the globe. The prices of our raw materials as well as finished goods came down in Q1 FY20. However, the business scenario has started improving gradually from mid of June 2020 in terms of better demand, higher utilization of plants and more dispatches. We believe demand scenario should further improve, and we are targeting to reach to pre-pandemic plant utilization levels in Q2 FY21 for basic chemicals and dye intermediates division. On the business strategy front, as you are aware, we have opened several warehouses and marketing offices in India and overseas as well, which we will be adding further in future as per requirements. In addition to that, we acquired 80% stake in Fenerbahce in Turkey and opened a subsidiary in Bangladesh mainly for marketing of our dye stuff. We will be increasing the share of 2C in overall dye stuff business going ahead. All these efforts will increase dye stuff share in total revenues, further integrate our business, leading to stable margins and increase in profitability in the coming years. During Q4 FY20, as you all know, there was a lockdown in Wuhan city of China, which led to improvement in prices of our finished products in Q4 FY20. 210 rupees per kg, and HSD was around 390 per kg in Q4 FY20. Apart from that, prices of all other intermediates as well as dye stuff were on the higher side in Q4 FY20. These led to 9% rise in our total income quarter on quarter and 2% year on year in Q4 FY20. The profit after tax was higher by 58% quarter on quarter and 2% year on year. Our total production for Q4 FY20 improved by 9% year on year to 65,341 metric tons. Our dye intermediates production grew by 8% year on year, mainly due to increase in demand, while basic chemicals production grew by 9% year on year, mainly due to higher utilization and addition of thionyl chloride. Production of dye stuff was around 76%. Total production for FY20 grew by 5% year on year. We acquired 100% stake in Trendlyne Chemicals during Q3 FY20, and the board has approved its amalgamation with Bodal Chemicals Limited in May 2020. We are in the process of doing certain modification in the plant, which were delayed due to one equipment was to come from China, which got delayed due to COVID-19. We are also making efforts to expand the marketing network in the US. We are confident to start and run operations smoothly from September 2020 at Tryon. Under the current uncertain business environment, our strong integrated business model and presence across value chain will provide significant cushion to the company. We believe business scenario to gradually improve from Q2 FY20 due to unlock in the country. Thank you, and I would now request Mr. Mayur to take up the financial performance in detail.
Thank you, Ankit Bhai. Good evening to all. On the quarterly financial front, our standalone total income improved by 2% year on year and increased by 9% quarter on quarter to rupees 3,359 million. Our standalone EBITDA, including other income, stood at rupees 462 million in Q4FY20, which was higher by 47% quarter on quarter. Standalone EBITDA margin, including other income, stood at 14% for this quarter. Our finance costs have increased year on year to rupees 30 million, mainly due to higher utilization of working capital limit. The profit before tax declined by 17% year on year and grew by 65% quarter on quarter to rupees 369 million. The net profit for quarter stood at rupees 301 million, which was grew by 2% year on year and 58% quarter on quarter. Our export stood at rupees 965 million and its share in total revenues was at 29% in Q4FY20. On the subsidiaries front, SPS posted revenues of rupees 249 million with EBITDA of 11 million in Q4FY20. Tryon posted loss of rupees 28 million in Q4FY20. We are committed to minimize the losses at Tryon going ahead. Thank you, and now I open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jason Soans from Monarch Network Capital. Please go ahead.
Thanks for taking my question. My question relates to basically, your dye intermediates and your dye stock business. Just wanted to know in terms of demand in, post-COVID and all, how do you look at the demand for both these dye intermediates and dye stock? And also if you can give some color about Tryon and, the demand in the end user industries as well, such as textile, leather, etc. How do you see the demand? You did mention that June has seen a pickup, but I just needed some more color on it.
Yeah, so the demand obviously since June has been, I would say, picking up on a weekly basis. I think the overall cycle has really strengthened up since beginning of June. I'm talking about the payment cycles also, where we're able to get the payments from our buyers, and the entire cycle has been improving. With the global particular demand in all different departments has been a bit different because of the COVID, wherever it is happening, it's been changing. Earlier there was a demand issue from Italy and Turkey when it was very high in the European area. Nowadays there is a demand issue from South America. So these days Brazil is very active and some of the other countries. So demand has been moving around as far as all the different countries go. But I think especially for the leather market now, Italy is now much better as far as the effects of COVID is there. So in the leather, particularly, the scenario has been improving very quickly. Overall, textile is also definitely improving domestically and internationally. So that's also a normal routine good sign. Other than that, if I talk about the local Indian industries or a particular trade, then I would say the industry is definitely running at around 50 to 60%. Our company particularly is about 65 to 70%, and we are definitely trying to take it up to around 80-85%. I think which we should be able to achieve by, if not August, and definitely by September. And those should be very comfortable levels for the company to operate smoothly. On the other end, the prices of a couple of the finished goods, which contribute a lot to our top line, they have also been correcting. So, for example, vinyl sulfone and HSA, both the prices had really decreased since the lockdown started. I think vinyl sulfone price reached around 140 levels, which is now back to 170 levels. Same thing with HSA, reached 320, 30 levels, nowadays 370 levels. So that is definitely happening due to the growing demand that is happening in last about 30 to 40 days. So that's the scenario. Textile, definitely there's still some slowing kind of developments that is happening there, but there's definitely some positiveness that happens every week. So what I feel is, there's definitely a growing demand that's coming continuously from textile also. And other than that, obviously, just like as an economy or India as a country, all the businesses are trying to get back on their own feet. So everybody's trying. So I think overall cycle, if we are able to, have generate a revenue of around 65-70% in, let's say, in June, then I think that's a very good sign. So within a very short time, things are turning around and recovering.
So thanks for that. That's all.
Thank you. A reminder to the participants, anyone who wishes to ask a question, may press star and 1 at this time. The next question is from the line of Hitesh Mehta from SBI Cap Securities. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions. First about, I think, intermediate price you just now said, but I missed. If you can help us, what was the average for HSA VS in Q4? Second question is about working capital cycle. It seems working capital cycle has elongated substantially in Q4 and even FY20 on look from full year perspective. If you can help us understand, partly it is because of COVID and partly because of the business shift which we are seeing more revenue coming from dye stuff. So if you can help us understand how one should look this working capital cycle playing out for us in next couple of years. And the last question is about the fixed cost. What will be the fixed cost which we are incurring, because Q1 is likely to be largely wash out for us. So what would be the per month fixed cost which we might be incurring? So if you can provide some perspective. And last is about capex. If you can provide how much now we considering COVID and overall weak demand, what would be the capex which we envisage for current year?
Yeah. Mr. Hitesh, Q4 FY20 average price for HSA was about 390 rupees and vinyl sulfone was about 210 rupees. But here we need to understand that prices of raw material for both these products have also come drastically down during lockdown, and currently that has remained at the same level. So this is one area. Secondly, as far as working capital cycle, yes, you are correct. That has bit strengthened in March 20, but that is mainly because of higher turnover, which was the highest turnover for the quarter in FY20. So that has led to higher debtors. But as far as inventory is concerned, that has remained more or less at the same level, which was prevailing in March 19 or of September 19. Presently, working capital cycle has improved a lot. There is a roughly about 190 to 200 crore of collection we have received since 1st April 2020, and sales is bit low. So at the same time, production is not that happened during first 50 days, but sales is continuously happening. So debtors as well as inventory both has come down. And as far as coming quarter, this will also bit improved level when we compare to March 20. For the coming years or quarters, inventory as well as debtors will remain maybe at March 20 level, because we are focusing more on die stuff business. And in die stuff business, we are required to keep higher inventory because number of colors are more. At the same time, we are focusing more on export. So for that also, we need to keep higher inventory. At the same time, credit period expected by customer in die stuff is bit higher compared to die intermediate and basic chemical business. So whatever level we were at March 20, that should be remain for coming times. As far as fixed cost, what you have mentioned is there is hardly about 5 crore of fixed cost per month company has. About 4 crore of salary and about 1 crore of interest. Other than that, there is no significant area where a company is required to do expense as a fixed cost. As far as capex, what you have mentioned, in capex, what plan we have declared last year, that capex plan we have dropped. So we have scrapped that plan and we are reviewing once again separately. So once the things are stabilized, business gets stabilized, at that time we will come up with some capex plan. But the total outflow for the capex will be drastically low compared to what we have declared last year. I hope I have answered your questions.
Yeah, so just one follow.
Sure.
If I look your net working capital cycle, it is around 86 days at the end of March. And so broadly, we should look around 85 to 90 days is more sustainable, or you expect it to further increase or decrease?
See, for coming time, for 1 or 2 quarter, it may reduce to 70, 75. But for a longer period, yes, 80, 85 should be the level where it can stay.
Understand. Thank you. Maybe I can come up for follow-up. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Ajay Kulkarni, an individual investor. Please go ahead. So, Mr. Ajay, your line is in talk mode. Kindly go ahead with your question.
Hello, sir. Am I audible?
Yes,
Yes, sir, you are.
audible.
So, sir, I just wanted to understand the China angle. Recently now, it appears that, the export incentives which were earlier not given by China, they have started to give that export incentives in the form of VAT refunds. So, and they have also, the Chinese players have started to again do oversupply in the dyes market. So just wanted to understand some color. Second question would be around, sir, I understand that ADD has been imposed on aniline. So where do we source majority of our raw materials and aniline as well, and what would be the impact of that on our margins going forward?
Yeah, so about the export incentive, that point you brought up, I think there has not been any major change in what is happening in China in the last 4 to 5 years. There has not been any big jump in terms of the percentage of incentives that the chemical industry gets. So I think there is not much change. There was a talk when their economy was facing a challenge to grow continuously at the 7-8% level. There was a talk that they will start those incentives again to boost the exports and to boost the economy, but that's not the picture. That has not happened. And so currently, as per my knowledge, the Indian and the Chinese export incentive levels remain around same. Earlier, there used to be a big difference. Earlier, I would say about 10 years ago, 15 years ago, there used to be Chinese incentive percentage number used to be much higher. So that used to be one benefit they clearly had, which in last about 4 to 5 years, things have changed and they don't get those higher percentage anymore. So that's the scenario there. And what is your second question?
Sir, my second question was about aniline. So aniline is one of the raw materials, and India has imposed ADD on aniline, right? Anti-dumping duty.
Yes.
Right. So just wanted to understand, where does our company source aniline from, and the other raw materials as well? And do we source any major raw materials from China, and what would be the impact on gross margins going forward?
So particularly our trade does import many intermediates from China, but it is not like agrochemicals and pharmaceuticals, where China is probably the only producer in 80-90% of the products. The good thing about dyes intermediate segment is that I would say about 95% of the products are available indigenously here also. Most of the players in dye sector, they import the raw materials from China, and they also have the local option. So that has been the history and the trend. But in last about 4 to 5 years, the growth that has not really happened in Chinese capacities of intermediates. So that has given a good opportunity for the local intermediate players, and I think that is why there's an improvement in the margins of intermediate players in India. So us being the top player in terms of capacity, we obviously do not depend on China much. There's only a couple of intermediates which we produce, and those are also very small in number and value. Those are the only ones which we import from China. So otherwise, some competitors, their dependency on Chinese material is definitely much more than our company's is. So our company's dependency, because we are the largest player of intermediates, our dependency is very, very less. But I would say some of the competitors do depend on the Chinese players. As far as the aniline goes, we do buy aniline from GNFC. GNFC is the only manufacturer in India. There is a duty, there's an anti-dumping duty. I think about 40%. There's a talk that's going on. So if that takes place, obviously the aniline may become a little bit more expensive in India, but that's only again a small part of our total purchase.
Okay, so that is very well helpful. So one more question, just wanted to understand your view on H-acid and vinyl sulfone prices going forward. How do you see, like, with increasing demand, you expect the prices to rise, and hence, so just wanted to get an estimate of your FY21 revenue and EBITDA broadly.
That is very difficult to for me to say right now. But the good thing and the positive thing is in June we had about 65% of our sales numbers on an average. So and July will definitely be better. So what we are targeting right now is to reach about 80% level in by August end. So I think when we reach 80% levels, those are good levels where our expenses can be taken care of. So that's our first target. Second is the prices of some of our important finished goods, they are gradually improving. So that's another good sign. And the third good sign right now is that because of no demand for almost 2 months, most of the chemical prices have come down, and because of that, we do buy some petrochemical related products and some of the natural resources related products. So all these prices, almost all of them have come down, and again they have also not corrected to their original levels. So they've also only improved about 5 or 10 or 15%. So I think that there's still a decent margin that's there, even at a price of 170 rupees of vinyl sulfone or 370 of HFC. So that's a good sign. So but going forward, I think globally whatever threat we had about COVID, let's say 1 or 2 months back, things have definitely changed and improved, and people's and government's attitude and towards the scenario has changed. So I think there is no choice but to but for people and governments and countries and companies but to operate. So I think I don't think the manufacturing will stop at all. So I think it will only grow from here. With all that, I think I also see consumptions becoming normal maybe 2-3 months, from today. Once the consumptions of, across the globe starts becoming normal, I think the overall cycles should become normal, and, that should really push the demands to go up. So, I think we are probably around 3-4 months away from a normal scenario. So that only gives us about around 5 to 6 months of the year. So this year, it's very difficult to, forecast anything, about the top line or the EBITDA levels right now. But obviously this year will be more of a survival, where we already see a good positive signs. So I think we should be okay this year, but obviously will not be able to produce a lot of margins or a lot of bottom line.
And the last question on the labor front. So, sir, has our manufacturing plant seen 100% of the labor that was present pre-COVID, or how much of the labor force has returned, and are we, planning any automation, or how do we plan to, work with that situation of labor crisis going forward?
See, us being in intermediates industry particularly, there is a lot of requirement of labor because of the nature of batch type processes. And us being leader in that space since many years, obviously some of the top contractors also work, with our company. So yes, there are some challenges for the contractors, but as far as our company goes, I don't see any challenges. So we are able to tackle the labor supply scenario. And I think because probably we are the largest account for most of these contractors, we are probably on their top priority list, preference list. So we have not been facing much issues as far as the labor goes since we started the operations.
Understood. So if I have anything, I'll come back in queue. Thank you very much.
Thank you. The next question is from the line of Sanjay Kumar Agarwal, an individual investor. Please go ahead.
Yeah, actually, I want to say, whether in April or May, were we able to do sales from our inventory, or it was a complete blackout?
April sales was only from the inventory, but from May 11th we could start our operation as far as basic chemical and dyestuff is concerned. And in basic chemical, to reach 70-80% is not an issue, and we are doing at that level since then. Dyestuff, yes, we are gradually increasing our production, but that has also picking up. And intermediate, as mentioned, that is also gradually picking up. So presently we are producing at all three divisions. And from May, sales is not only from the inventory, it is from the production also.
So if you were to put a number, since you put in June, we have achieved 65% of the capacity. So what would be the capacity utilization for April and May together?
April and May, hardly 30-40% cumulatively, if we consider both the months.
Okay. And how are the margins going forward? Looking, you have told me the prices of product has also gone down. In the meantime, raw material prices has also come down. So you are confident of achieving 10-15% of margin?
I think at current levels, yes, at EBITDA levels, I think we can achieve around 10-15% of those levels. Also, there are a couple of major manufacturers here domestically. There are some disturbances in a couple of the major plants. So I don't have any clear information right now, but I think one of them got a closure already. That's probably the second largest unit of HSD sulfone. And another unit which is yet to start post the lockdown also. So that is, I think that will create some problems on the supply front. So that can also play some role in the immediate future.
Mm-hmm. Okay, thank you.
Thank you. The next question is from the line of Rohit Nagaraj from Sunidhi Securities. Please go ahead.
Hello. Yeah, thanks for the opportunity. So my question is related to just you said about one of the manufacturers, there is a closure, the second largest. So have we seen any small manufacturers probably going out of the space or deciding to go out of the space because of the current issues that the industry has been facing?
No, there is definitely no news of any small or large player leaving the business or going out of business.
Okay, and another question is on the die stuff pricing. So how has the pricing behaved during the entire FY20, maybe from the start of FY20 to end, and how those prices are currently placed?
So the current prices are obviously less than the average prices of FY20, because FY20 obviously was a good year as far as the intermediate pricing goes. So because of the higher intermediate pricing, the die stuff pricing was also higher. And now, right at the beginning of this year, we started with the lockdown. So currently, obviously, it's a limited business that has been going around. So obviously, like intermediate pricing, the die stuff prices also fell. But as of now, there are still pending orders, that has been happening. So it's an extraordinary scenario where people are trying to finish the older orders. So overall, as an average, it may be higher. The current dispatches may be higher than the current price. But I think it's all going to dilute, maybe in the next 30, 60 days. And then the normal scenario should start.
Okay, and how has been the performance on the exports front? Because we hear that there have been some issues at the port in terms of exports and probably at the receiving end also in respective countries. So how has been that performance over the last maybe 3 months or so from April to June?
So in April and May, there were a lot of issues. I think for first about 20, 30 days, there were talks that the ports did not stop, but there was no operation. So if you wanted to send something out, it was not really possible because there was everything was not clear from the government's front. There were issues with the unions of the transporters, etc. So first 20, 30 days, I don't think there was much movement. But post that, around May, first, second week, things started becoming smooth. And I think June was very much smooth. As far as the export goes, I think June there was no issue at all.
All right. And just one last question. Are we in indigo blue manufacturing?
No, we are not.
Okay. Any idea how have been the prices, if you know, from the industry point of view?
Of indigo blue?
Yes.
No, I don't know because that space is dominated by Chinese. There are some manufacturers here, but they are very small, and we don't relate with them, so I don't keep track.
So any idea, any plans of probably going into that space, because that space probably has still potential opportunity as far as India is concerned, and since it is only manufactured in China, and given that the new initiative Make in India and Atmanirbhar, this could be an opportunity for Indian space. So are there any plans?
It's a good opportunity, but the entire raw material chain is not available. I think that's one issue. And the manufacturing of those particular colors, that goes into denims, they also have a different, they are also technology related. So I think that is not really available in India as of now. Arvind Limited has been, looking to partner with someone. That's what I've heard. I'm not sure. But I've heard from the market, they are looking, because they are probably one of the largest of denim manufacturers. So they are also looking for a consistent indigo blue supplier. So yes, there is definitely demand of that particular product, because there are many denim players are now there in Ahmedabad area only, not just India. So there is definitely demand that has really grown in last maybe 5 to 10 years. But unfortunately, the dyes is still not available, so it's dominated by the Chinese. But yes, like you said, it's definitely an opportunity. We, as of now, are not considering it seriously. So we can probably assess it, but it's not part of our list as of now.
No problem. So thanks a lot and best of luck.
Thank you. Next question is from the line of Aditya Khetan from East India Securities. Please go ahead.
Hello, sir. So my first question is on the utilization of thionyl chloride. So what are the volume numbers for FY20?
FY20, operational number of FY20? Just give us 1 second. We have given a number of Q4FY20 that which was around 76%.
Okay, so 76% is the utilization figure.
76 is the utilization for Q4FY20, not for the entire year.
Okay. And what would be for the entire year, sir?
It is around 35 to 40%.
35 to 40%. And sir, in the presentation you have mentioned that the standalone income has grown by 2%, and that is because of the rise in the dye intermediate prices. But sir, while we are calculating, we are getting a decline of 30% in the dye intermediate prices. So that rise in revenue was because of the volume front. So could you clarify this? So this increase in revenue is because of pricing or because of volume?
The increase in volume is not that much, but as far as in price, yes, for Q4 it was there and significant.
Decline or significant, you mean?
Improvement in the price for dye intermediate. See, because COVID issue started from December in China. Gradually, prices of all dye intermediate has improved, and till March that was at a higher level for almost all dye intermediate.
Okay, but sir, on the numbers point, sir, we are witnessing a dye intermediate is witnessing a revenue fall of 10%, and there has been a growth of 8% in the volume front. So definitely the decline was...
That is because of the captive consumption that is increasing.
Okay.
As we have mentioned, we are focusing more on dye stuff.
Okay.
Yeah.
Okay, sir, that's all from me.
Yeah, thank you.
Thank you. The next question is from the line of Manish Otwal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. I joined the call late, so I may be repetitive. The first question on the debtor days increase during the year. You mentioned in your presentation that because of COVID crisis, it has increased, but coming quarter it will be corrected. So, up to June, have you seen meaningful correction in the debtor days, or still we have to work on it?
No, till June end, there is a significant improvement as far as number of days blockage in debtors. There is a drastic improvement is there.
And sir, what is the capex plan for the current fiscal, and how much we have incurred last year?
Last year we have incurred about 39 crore.
Okay.
And current year there is no fixed plan as far as today is concerned. Whatever 20 to 30 crore we are doing for maintenance, that will be there. Otherwise, there is no clear plan for capex.
And lastly, on the balance sheet side, since our debt to equity ratio is very strong and our balance sheet is very strong, so any plan of inorganic opportunity we are looking at in the current scenario, considering the opportunities coming in the due to China factors. So are we looking at any inorganic opportunities, or we continue to reduce our debt? What is our balance sheet view?
Yeah, we have been very strong as far as the inorganic growth goes. Obviously, we would be open for things like that, but I don't think any attractive opportunities would come at this time, because overall trade, I think, is doing much better compared to maybe 5 or 10 years ago. But obviously, we would be open for it, but we also have some good potential product mix, which we want to do at our Saika site. So we want to actually focus more on our greenfield projects at Saika as of now. But obviously, we would be open for inorganic growth as well.
What is our comfort level of debt to equity ratio, sir, internally?
So earlier we were comfortable at a higher number, but I think now we need a change of plan. So we are probably considering around 0.5.
Okay, thank you very much.
Thank you. The next question is from the line of Hitesh Mehta from SBI Cap Securities. Please go ahead.
Yes, thanks for the opportunity. I just want to get sense about the pickup which we are witnessing from July onwards. So if you can help us understand, I think broadly you indicated about you expect to reach pre-COVID level utilization by end of this quarter. So should we expect your Q3, Q4 performance to be largely normalized kind of thing from YOY perspective? And we see some growth because better utilization will be there?
As you have mentioned correctly, current quarter will be for us to recover. And then within a month or two, things will be more clear as far as how Q3 and Q4 will go. How at the world level recovery takes place as far as COVID is concerned. See, all major countries we have been looking that COVID affected or number of cases are declining, barring some countries, 2-3 countries like Brazil, etc. So in a way, looking to current scenario and current trend, we should be doing same way for Q3 and Q4 what we have done last year.
Typically our exports are strong in Q1, Q2 kind of period and maybe Q3. How one should look that market playing out for us? Because Q1 is largely where we are because of lockdown and some logistic challenges. I think export might also face challenges. How that export market related things are, any logistic challenges still we are facing?
See, logistic challenges are not there, but as far as demand at the world level, yes, it is there, issue is there. But for us, there is always an option to do sales at local market also, and that is what reflected in Q4 of last year. See, last year Q4 export was hardly 29%, and in earlier quarter it was near to 50%. So though there was an export decline, but as far as revenue is concerned, we could do even better. So we are not only dependent on export or local market, we have both the option open. So if one area is not doing well, we can focus on other area and get recompense ourselves.
So, and sir, about the subsidy, SPS and Triumph, I think we anticipated break even this year, but it seems we are still incurring losses in both the entities. If you can help us understand how one should look these two entities' performance and what steps we are taking to reduce losses in those entities.
Yeah, so we were trying to, like you said, get to the normal break-even levels. In SPS particularly, we could not do it because the vinyl sulfone plant could not start on time. There were issues with the supply of a critical raw material that comes from Reliance, and there was some issue regarding the clearance of the vehicle that would carry it from Reliance plants. So that took a few months, and that's what got delayed. Now the plant is ready, and immediately as of now we are not starting because we are just waiting for the right time, because obviously the demand is not at 100% right now. So I think very soon we'll see the demand to rise to a level where we feel comfortable to start vinyl sulfone plant at SPS. So I think when that starts, there's an integration possibility, which is the main reason why we acquired that company the stake in that company and, the plan to set up the vinyl sulfone. So finally that should take place now in a very short time. But so we could not do it in FY20. That's the reason why, it did not probably break even or, generate some good profits. In Trion, we had a few different type of issues. There was a technical issue coming from the plant coming from Chinese. The technology is from the Chinese. It was set up with the help of Chinese. So that was the main reason. We also had a couple of leakages problems during FY20. And this is the only plant of that product in India. So the know-how of the technology or the parts and some of the key points technically was never available in India. So we did face a few issues there. Finally, we decided to buy out the entire stake of our partners there, so we can work. We can run the plant independently, sell the product independently. So that has happened very recently. So now our strategy is very different, very clear, and we are planning to start actually the plant in about 15 to 30 days. There were some parts that had to come from China that's just been cleared yesterday. Also some local couple of parts that's coming from Pune that's also coming in a few days. So we should be able to put everything together and start the plant very soon. And also the target will be to run it continuously and supply it to the US. And parallelly we are also exploring more markets in the US, more buyers. So I think we should see some positive things in Trion also in 2-3 months time.
Understood. The last question is about the employee expenses. If I look employee expenses, this quarter is almost 8 crore higher than previous quarter and almost 16 crore higher than previous year. If you can help us understand what led to such increase?
Yeah, you have a proper observation. See, as far as the employee cost is concerned, earlier we were focusing on SICA project, and in earlier my speech I have mentioned that we have scrapped whatever capex plan we have. So there was some capital work in process that was carried forward to the tune of about 9 crore. And in that 6.5 crore was a salary component, which we had capitalized during last 2 years. Now, since we have scrapped the capex plan, we are required to write off all this working capital in process. So during current quarter, we have written off this thing. So 6.5 crore of additional salary is because of this write-off. That's why the figure is a bit higher compared to earlier quarter.
So from next quarter it would be normalized again?
Yes, it will be once again normal. See, last year full year salary was about 60 crore and this year it was 77 crore. So if we remove this about 6-7 crore, then 68-70 crore is a normal. So that should be there during current year.
Understood. Thank you very much.
Yeah.
Thank you. The next question is from the line of Ajay Kulkarni, an individual investor. Please go ahead.
Hello.
Yeah. Please.
Sir, just wanted to understand, you mentioned that some second largest player has shut down plant of H-acid and vinyl sulfone. So is that a domestic player or it's a global player?
It is a domestic player. I think there's a closure that has been given to that plant for some issues.
And sir, what would be the capacity? I just want to get a sense.
In terms of Indian installed capacities, it would probably be around 15%.
15%. Okay. Thank you, sir. Yeah.
Thank you. As there are no further questions, I now hand the conference over to Mr. Ankit Patel for closing comments.
Hello, this is Mayur here. Thank you very much for participating And if any participant's question remain unanswered, then they can directly contact us. Thank you and good day.
Thank you. Ladies and gentlemen, on behalf of Bodal Chemicals Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.